Hi, Saen Higgins here, Delaware. Is it a lien or a deed state? We're going to cover that in this video. In this video, we're going to discuss Delaware and specifically the mysteries of tax liens and tax deeds and how Delaware fits into this puzzle. You're going to love this video. Delaware is very unique in the way it produces tax liens or tax deeds. I'm going to show you exactly how to make it happen and rock your financial world in this video. And at the very end, I've got a little gift for you. So stick around to the very end and we'll show you what that's all about. In the meantime, like, comment, questions, anything you need in there, subscribe. I've got so many of these going on. We're already up to 35 different states that we've given you information on. And from this, there's a plethora, big word alert, plethora of information. So let's get right into it. First of all, Delaware is a very unique state. You know why? Because if you're driving through Delaware and you blink, you're in another state. Sorry, Delaware, you don't even have a football team. Okay, you don't even have a baseball team. Okay, what you've got to do, but you're the financial capital of the world. Tax liens and tax deeds market there is phenomenal. But let's just back up a little bit. Before you do tax liens, before you do tax deeds, make sure you understand what the rules and the regulation of that particular area. Now, you've heard me say this over and over again. I want you working with 36 counties. We've got the 663 rule. 6 lien states, 6 deed states, and 3 counties in each one of those states. So if Delaware happens to be one of them, guess what? It's going to fall into the, drum roll, tax deed version of it. This is a redeemable deed state. So it looks like a deed, acts like a lien. There you go. And again, you've heard me say this time and time again. The more confusing a state than a county makes it, the more I start rubbing my hands because they're not going, oh, how can I make Sean's life miserable? What they're doing is they're doing this for everybody. So the more difficult they make it for you, they're doing it for everybody. And most people won't take the next step, not like you watching this video and learning this stuff. You're learning this stuff, you're making it happen. So it's a tax deed with a redeemable aspect of it. So let's talk about this for a minute. That means you're gonna own the property. You had better do your research. Okay, so let's say I have a list of tax deeds on it. That means they're going for sale. Now, it's only a 60-day, 2-month redemption period, okay? So once you go to that sale and you put that money up, that person has 60 days to come in and pay those taxes off, plus a 15% penalty to you. So whether they redeem or not, your return is insane. So let's say I buy a $20,000 tax deed in the state of Florida, and 60 days later, on the 59th day, they come in, they go, we made it. Okay, here's the money. They have to pay me 15% in penalty. Okay, that's like, remember Blockbuster Video when you didn't rewind, they gave you a penalty, be kind or rewind, or am I totally dating myself? Yes, I probably am. But anyways, Blockbuster Video, we used to have videos, not DVDs, not streaming, not any of that stuff. As my daughter says, in the old days, okay? The bottom line is it's a penalty. So they would have to pay me $3,000 penalty plus my $20,000 if I were to buy a tax deed for 20 grand in 60 days. Okay, please. Where else in the world are you gonna get that kind of rate of return? It just doesn't exist out there. Now, I own the property. It better be a property that you want. Okay, so now comes the research on it. Okay, again, I wanna make sure it's in the right neighborhood. What do I mean by right neighborhood? I've never even been there before, Sean. It's just simple. You guys don't get all crazy and order the Chamber of Commerce BS and all that stuff. No, all I gotta do is in that county, I wanna find the median price of a property. What's the average price of a home in that particular area? And so let's say for this example, I don't know, let's just say it's $250,000. So if I'm looking at a tax deed on a property that's in a neighborhood of $150,000 value properties, I'm in a lower income area. Okay, if I see a property and it's a $400,000 area, I'm an above average property. That's it. Remember, we're not buying properties at a fraction of retail. We're buying them at a fraction of wholesale. Okay, so I'm buying a fraction of wholesale. So if this property, let's say $250,000, opening bid is $20,000 in taxes, and let's say I win it for 50 grand, well, I'm doing pretty darn good. So what I want to do is I want to make sure my research is correct on that, number one. Number two is, how do they want the money delivered? So if I am the successful bidder, how do I pay the money? When exactly is that money due? Okay. You also want to find out, is this an online sale or is this going to be a live and in-person sale? Either or, I want to know when I need to be registered and how I need to be registered. So in other words, if I've got a trust or I've got an LLC or whatever the case is, that's what, oh, John, I've got an LLC. I'll just register my LLC as the bidder. Then do they require you to have a proxy bidder? So these are all things you want to look at before you're going in there. Okay, so now that I understand how they want the bidding, what the process is this a sealed bid? Is this a premium bid? All of those things are important. So now if I'm looking at the property and I want to look at this and say, okay, what is my maximum bid on this property? If it's $250,000, and let's say it's going to need about $35,000 in rehab. Sean, how do you know it needs $35,000? I really don't. Okay, what I'm trying to do is get my best guesstimation of what that value of the rehab is going to be. And no, you're not going to be able to knock on the door and say, can I take a tour of your property that I'm thinking about buying at the sale? Typically, the person living in the property is not the homeowner, it's going to be a renter. So that's not going to be an option. So you're doing a little flying by the seat of your pants. This is where we eliminate some people in this. Like, I don't like doing that. This might not be the business for you. For me, I love that. It has been very few times where I've gotten a property and it was in much worse condition than I anticipated it to be. Like, I've gotten some properties that I flat out knew this thing was going to be a piece of garbage. Okay, when there's gutters on the top and weeds are growing out of them, it's going to be a garbage piece of property. I was walking, my daughter and I were looking at properties just literally this last weekend, and we pulled up to this house and we got up and she goes, oh no, Daddy, this is a garbage property, isn't it? I can tell. Ooh, she goes, we are not buying this property. I said, baby, we're not living in the property. She goes, this needs way too much work. And it's so funny because I was looking at it going, oh my gosh, this is going to be a great project, because I knew exactly what we were going to do with the property based on its current condition. Now, I happened to be able to get out and look at this particular piece of property because there was nobody living in it. And this thing was literally so bad that we were going to knock it down, okay? Because I was looking at this almost like a land deal, okay? And I've got other videos on buying land, but oh my gosh. So I'm looking at this going, oh yeah, this thing, we'll just, what we call a scrape. We're going to scrape the property, okay, and build something on it from there. Anyways, I kind of deviate from that. But there you go. It's a great little deal. So when you're looking at the property, you want to guesstimate, what's my best guesstimation of fixing up this property on this? You know, and you're going to get better at this as time goes on, okay? But I'm looking at this going, look, if I get into this property, and let's say I spend $50,000 or $75,000 even on this property, and it needs a lot more work than I think it does, guess what? I can wholesale it. Okay, you've got so many options out there. If you go, look, I want out of this property and I'll take $125,000. They got it for less than half price. That's a wholesaler's dream. Okay, and you still made $50,000, which also factors in the velocity of money. How quickly am I going to be moving this money? And that's pretty quick if we're going to wholesale it. But if I get in this property, hey, it only needs about $40,000 worth of work. I fix up the property. I'm renting this thing out for $2,600, $2,700 a month. I've got great cash flow on it. Now I'm building true wealth. Okay, I'm building that generational wealth, if you will. I've hit all of those markers on there. So that would be my second one. The third one, and not my favorite, but it's a way to do it. Okay, I go in there, I buy the property, right? I fix the thing up, I sell it, and I put $100,000 in my pocket. You're like, wait a second. Why is that not your favorite? You just put $100,000 in your pocket. Yeah, well, I'm just put myself into a higher tax bracket, and guess what I'm going to have to do? I'm going to have to pay taxes on that. So one of the things that's always going to come up in every single deal you do is that infamous partner called the IRS, Internal Revenue Service, or your federal taxes. More often than not, that's going to determine where I go with this property on it. Because look, if we didn't have to pay taxes on this money, people would be buying and selling, buying and selling, buying and selling, and there wouldn't be stability in the market. Believe it or not, the whole tax system actually benefits the real estate market as a whole, because they say, look, if you're willing to buy it and you're willing to fix it up, not only do you get to write off, you know, the cost of fixing that property up, but now we get to pretend like you paid the full value of the property. So let's say it's now worth $300,000. I get to depreciate that property over 27 years. So I could sit there and collect rent from this property, but technically the IRS says you're losing money. What? That's how you hear people say, I'm losing more money right now. I've got tax write-offs that make my tax bracket go down to zero. Well, why would they do that? Because everybody won. I bought a property, I fixed it up, I provided housing, I got a renter in there, a contractor in there. Oh, I had to buy a truck, okay, to make that whole thing happen. I've got, this is how it works. And if nothing, the pandemic showed us that when that system stops, things go bad. And so what the tax code is really designed for us to do is perpetuate this, keep this thing going. And Delaware is a great place to make that happen. Now, as you can see, there's a lot going on there, not just a tiny little state, but a lot of information. So if you want more, guess what? You're in luck. I got a free course right now, brand new, off the press. Click the link down below. That's higginsmethod.com. Higginsmethod.com, Higgins, method.com. Boom, hit that, and I'll give you a free course. This is Saen Higgins saying God bless and good luck.